Hey, good morning, guys. Happy Monday to you. Amir Garami with MCF Mortgage. Welcome to episode 3 of the MIDD. MIDD stands for Mortgage Intelligently Deal Desk. Today, we're going to discuss a scenario that Ray recently closed and funded. Ray, can you tell us a little bit about this transaction?
Sure. Thank you, Amir. Happy Monday, everyone. Welcome to our episode 3 of the MIDD. And today's episode, we're going to discuss a cash out refinance where a client of mine needed to pull out about $100,000 in cash from their primary residence in order to purchase an investment property out of state. So the challenge here is that my client was and is self-employed, and he was also sole owner of his business. And it was a one-man shop. He got turned down from getting traditional financing by a couple lenders. So he was referred to us. After looking into his paperwork and his documentation, his business and so forth, we looked at pretty much at the overall business, and we realized he actually does have the ability to repay the mortgage. So we ended up closing on his transaction actually this past week. He was able to secure the cash out in order to purchase his investment property. But the beauty of it all was that we were actually able to reduce his rate by more than 2%. So he actually ended up having a lower mortgage payment on his new mortgage with a balance of $100,000 higher than his previous payment. So it was a big win for him, and he was super excited about this.
That's amazing. Good work there, Ray. So, guys, if you heard it, cash out primary residence, that's always a challenge, especially when you can't document income. You looked basically under every nook and crevice and found a way to document the ability to repay, not income, but the ability to repay.
That's right.
You got him a cash out to buy another investment in Florida or out of state, and you reduced his rate and his payment with him taking more money out.
Yeah, by him taking more money out, and by over 2%, I believe it was. Yeah, it was crazy.
Over 2%. So that's huge, guys. Ray, so one thing that I want to chat a little bit further about is this borrower took this money and bought an investment property out of state. Right. One of the questions that we always get, as a company is, hey, can you guys do a loan for us in a corporate entity in an LLC or something of that nature? Now, we do help a lot of borrowers that are investors, that are landlords, and that LLC or that corporate protection is important for them. Can you do it?
Absolutely. So this particular borrower in his scenario did not want to put the property in an LLC. However, we do offer that opportunity or that option for clients to put properties in an LLC. Yes, we do.
All right. So again, that's huge, guys. But being able to buy a property, because conventional financing does not let you do that. On a conventional loan, you have to sign personally on the loan. You cannot buy it as an LLC. So being able to buy it as an LLC offers a lot of asset protection to you and other benefits. If you guys have questions, give us a call. We'll discuss your particular scenario, see how we can help you out. Another question that always follows up the LLC question, sure. Interest only. Landlords like interest only. Do we do interest only loans?
Yeah, absolutely. They do like interest only because of the lower monthly payment, increasing their monthly cash flow, right? So yes, we offer interest only loans on these mortgages, whether they're in an LLC or not on an investment property, right? The other big benefit that we have is these are term loans. These are 30-year fixed mortgages, Amir, that clients are taking out. Where traditionally for an LLC, they're either doing some sort of commercial financing where it's some type of an adjustable rate mortgage, right? So that's the other important part here. These are fixed rate mortgages with 30-year terms.
That's cool. That's really amazing because it really does not exist. There's not too much of it out there. One final thing is, I know when you were saying you looked at everything that was out there, can you speak a little bit about what we do as things being tailor-made for that borrower? Because conventional loans and traditional bank financing is a box.
Right.
And that box doesn't work for everyone. You just don't fit all the time into a box. What's different about our product?
That's a great question. And actually one of the first questions he actually asked me when we initially had our first conversation, right, was, hey, do you guys offer the same have the same sort of guidelines that everybody else does? Because if so, I don't want to waste my time, right? So of course, I explained to him, no, we don't. We definitely will look outside that conventional box that he's referring to and that you just mentioned, Amir. And we will look at each individual clients on a case-by-case basis, because everyone is different, right? I mean, we often talk about, everyone, these things are like fingerprints, right? These more types of mortgages. Everyone's scenario is different. Everyone's credit is different. Everyone's, how they earn income is different. Just because you're self-employed doesn't mean, you're always earning the same type of income, right? There's so many different types of self-employment opportunities out there in businesses that earn income in many different ways, right? And this particular borrower, his income, he actually didn't receive income on a regular basis every month. It was just big influxes of income, once every 3 to 4 months, right? So, he didn't have, it was continuous if you look at it over, period of time, right? But of course, traditional lenders don't do that, so with us, we're able to, go back a couple of years, and we were like, hey, look, this gentleman, he's receiving income, it's every 3 to 4 months, but it's consistent, right? And he definitely has, obviously has the fund. He also had the assets, he had, the credit scores, and he had the equity in the property. So he definitely had the ability to repay on this mortgage. So, just to sort of, recap, yeah, it's definitely done. You used the word tailor-made. So, I use customized or custom based, right? Because everyone is, has different parameters, and but we'll look at them all, to make sure it fits within our box.
So I guess, yeah, that's the key takeaway. No matter how we term it, guys, this is designed for this borrower. We make sure that we're looking at a long time period, if necessary, to document the borrowers. And there's a key term that Ray has mentioned a few times: ability to repay. And maybe we'll discuss that on Monday on our video, the Mortgage Intelligently University, so you guys understand what goes in our minds when we're doing this type of loan, what we look for. But so again, tailor-made. You guys could do interest only. You guys could be in an LLC. Take out cash from a primary, cash from an investment, whatever the scenario is.
30-year fixed rate mortgages.
30-year fixed. We even have a 40-year if you guys are interested in that as well too. So guys, there's a lot out there. I hope this small video, this short video, gave you some pointers in how you could structure deals if necessary. If you're stuck on a deal, call Ray, call myself, and we'll shepherd it through and make sure that you get this family into a home. All right. Anything from Ray? Any parting words?
Have a great Monday. Just use, these tools while you're out there talking to clients. Just know that there are challenges that they may, that come up that, clients do have. And a lot of times, they just sort of shy away from the opportunity when they do really have an opportunity to move forward with a purchase transaction.
All right, guys. With those words, we'll close it up. Catch us every Monday at 12 p.m. Pacific, 3 p.m. Eastern for the MIDD. Our Mortgage Intelligently University, the MIU, is every Friday at the same time, 12 p.m. Pacific, 3 p.m. Eastern. You guys have a good Monday.
Happy Monday, everyone.
Take care.